All right, let's talk some more tech here. And the latest from the sell side, Jenny Horn taking a look at the Nvidia hype. What's going on this morning?
The Nvidia hype, as it just keeps going. And I know you were just talking about the way this is like the only thing that carries the overall market. But right now, it's favorable because Nvidia is adding another, just shy of 1% this morning, gained about 2% yesterday. So right now, the momentum has swung obviously more in the favor of those that are bullish on like Nvidia and the AI trade. Keybanc today, though, raising its price target to 180 from 130 with an overweight rating. So that would obviously be well above the new all-time high, which is just around like 140 a share in Nvidia. But they said they're not seeing any sort of pause in demand for their H100 overall figures, despite the fact that we are seeing Blackwell launch in the second half of this year, no demand pause, they're saying, which I think is like the key takeaway. So they overall see demand just continuing to grow. They also do believe that demand for GB200 should support data center revenues of over $200 billion by 2025. And I think the data center revenues are fascinating. Like more signs that we continue to see of like the money flowing into data centers is strong. We did see that this operator of data centers, which Cyrus One is what it's called, said Monday it's secured about $8 billion worth of credits right now, continue to build its data centers. So that to me is like been the most interesting and the most, I think, exciting part of Nvidia's growth is like their data center growth and their revenue, which has been astounding. And this note from Keybanc, though, today did also include lowering their price target on AMD, on raising their price target on Marvell. But I have to say that this was objectively still a very bullish note because every single price target, even the reduced ones, were still well above where like AMD is currently trading.
After Nvidia stock witnessed a surge following price target increases from investment banking titans UBS and Wolfe, the company is seeing another triumph as renowned Wall Street investment bank, Keybanc, made a brightful prediction for Nvidia's future, boosting the stock higher. This is great news for the chipmaker, as it showcases the investment bank's strong confidence in Nvidia stock and strengthens the beliefs that say Nvidia still has a huge room for further growth. And these price target hikes are simply a result of Nvidia's continuous innovation. Hence, tremendous bets on the giant of chip-making never stopped. So, in today's video, we will discuss what prompted Keybanc to raise their price target and what might be coming next for the future of Nvidia. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Welcome back to Next Gen Investing. It's time for FOMO. So joining me to discuss Nvidia, of course, because what else right now is really moving these markets is I'd like to welcome in Caroline Wood, Senior Markets Correspondent for the network. So Caroline, another day, another Nvidia story, some analyst optimism. But at this point, it's just like the momentum trade, it feels like of the last decade because we just keep watching Nvidia and it dictates, it feels like the overall market. Now giving up some of its strength in real time here, but still up 1% obviously on the session.
Yeah, it was up more than 3.5% earlier in today's session, but yes, has given up some of that strength, now only up about 1%. But yes, another day, another Nvidia price target hike. This one coming from Keybanc. The analyst there raised its price target to $180 a share on Nvidia from $130, kept an overweight rating on the shares. It's one of the highest price targets that I've seen on the street. Rosenblatt is at $200, but 180 implies almost 40% upside from current levels. The Keybanc analyst has a few positive takeaways for Nvidia. It says despite the impending launch of the Blackwell chips in the second half of 2024, they're not seeing any signs of a demand pause ahead of that, as demand for the H100 remains robust. They continue to see rush orders. Also, the interest in demand in the GB200, which is the highest end server model of its new Blackwell product line, is greater than they had initially sized, and this analyst says it could support over $200 billion in data center revenue in 2025. So definitely optimistic on Nvidia and, notching that price target higher.
After the brief fall it suffered last month, Nvidia seems to be recovering and heading up to the top once again. At the moment, the stock price is nearing the highest price the stock reached before it split, but adjusted to reflect the split. This is because the original record high was $355.80. But after the 10-for-1 split, this high is now considered $135.58. Nvidia stock has just got another boost forward after Keybanc's renowned analyst, John Vin, raised his target on the stock from $130 to $180, while keeping an overweight rating on the stock. Notably, Vin's new target implies an upside of 37% from the current price. Also, he is now the 7th analyst to raise his price target on Nvidia stock in July, according to FactSet, though the average price target remains at $130.92. This is definitely a very positive indication that the company is performing well above expectations, and more target price increases are expected as analysts continue to update their forecasts based on Nvidia's performance and market conditions. Vin said that AI demand will continue to drive further gains over the back half of the year and beyond. Although the Chinese market struggles to gain momentum due to economic conditions, regulatory challenges, trade tensions, market competition, and sector-specific factors. As a result, companies like Nvidia might face growth hardships from the Chinese market in the near term compared to other regions or sectors. But once this issue is solved, Nvidia's profits will reach unprecedented levels. And Nvidia is already on its way in rectifying the Chinese dilemma. The company will reportedly sell more than 1 million new H20 chips, especially designed to comply with U.S. restrictions on selling AI processors to Chinese customers. This could generate more than $12 billion for Nvidia, and will give it a chance to expand its share in a colossal market like China. So, is Vin's statement really a surprise? Especially as many analysts were already doubting Nvidia's future growth potential? Let's find out. Hello, everyone, and welcome back to Investocracy.
Yeah, and I think that that's a substantial argument to be made right now, because I do think that when you have a name that's run up to this extent, it's all of our fears, really. It's like standing in front of this like moving freight train, it feels like, to try to be against the Nvidia momentum. But also, I guess the bullish thesis, and I'm sure you see this continually, is the fact that maybe this name isn't actually overvalued at this point. I mean, it trades at a multiple that is actually cheaper than like an AMD, which to me is just frankly amazing when you look at some of the like winners and losers in this space, that it still trades at 43 times. I know that's gone up, I mean, like almost double over the last several years, but it's actually still relatively affordable.
Yeah, and I think that the big question for an Nvidia is looking further out how much of that was a pull forward in terms of, you know, what's next once, you know, maybe some of the competitors catch up, or, you know, once there's not as much chip demand for an Nvidia, but it seems like that's not really on the radar right now. Going back to what Alex had to say, too, I think that, you know, there was the Citi note I was reading about in a Bloomberg article. A Citi analyst was saying, or a group of analysts said, we continue to suggest investors take profits in AI high flyers, in particular the chip makers. Didn't necessarily call out Nvidia, but said investors should rebalance toward a broader array of AI stocks across the value chain. Our estimates suggest stock prices imply lofty expectations, but long-run consensus estimates suggest most are attainable. So essentially, sentiment is very optimistic, but still shy of a full-blown bubble. That being said, they have a buy rating on Nvidia and a $150 price target, so $20 higher than where it's currently trading right now. So, you know, maybe that plays into that Melius Research theme a little bit, but for the most part, you know, it's still a lot of bulls on the street for Nvidia.
Yeah, and I was also reading that highlighted basically like the underperformance of some of these names we've seen. We could see the laggards now start to outperform, but so far, again, betting against Nvidia hasn't worked. Is it the underperformers? I would say still continue to lag Nvidia. So it's why it's a great FOMO candidate as always. But appreciate the breakdown. Appreciate it as always, Caroline Wood, senior markets correspondent for the network.
Vin's statements are not a surprise at all, considering the enormous AI demand currently, of which Nvidia plays a crucial role with its very high-quality GPUs, which made the firm one of the companies that benefited most from this AI boom. Another reason why so many analysts are bullish on Nvidia stock is the incredible anticipation for the company's upcoming Blackwell platform, for which companies are already racing. In fact, it was recently reported that tech giant Google will offer Blackwell on its cloud services, including GB200 NVL72 systems. Each one is composed of 72 Blackwell GPUs and 36 CPUs, and while one knows how many GPUs they have bought, analysts believe that the number is very large as Google is trying to establish itself as a leader in AI technology. And eventually, with the expected colossal growth for the AI market, as it's projected to exceed a staggering $826 billion by the year 2030, Nvidia is guaranteed an incredible growth alongside. Additionally, we must take into account Nvidia's dominance in certain industries such as gaming, where the presence of Nvidia's graphic processing units is a must. In fact, in the first quarter alone this year, Nvidia's GPUs generated $2.6 billion of revenue from the gaming division only. On top of this, the huge expansion of cloud computing and data centers is massively increasing the demand for Nvidia's GPUs. In fact, in the first quarter of 2024, revenue from the deployment of Nvidia's GPUs in data centers was a record $22.6 billion, up 23% from the previous quarter, and up 427% from a year ago. Besides, as long as machine learning and AI applications grow, Nvidia will keep growing because the firm's AI chips are simply unmatched, and implementing them is a key role in the continuous progress of this industry. Industry leaders also depend on Nvidia, and even Elon Musk has said that Tesla will increase the number of its active H100s, Nvidia's flagship artificial intelligence chip, from 35,000 to 85,000 by the end of this year. Furthermore, many analysts expect Nvidia's GPU's usage to increase in 2025 by a shocking 50%, as they are becoming an urgent need in various sectors. Now, with all of these givens, the bullishness doesn't surprise us at all, as Nvidia's future seems brighter than ever. So, what does this mean for Nvidia stock? Is now the perfect time to buy? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We're also watching semis this morning, semiconductors. Analysts over at Keybanc, they boosted their price target on chipmaker Nvidia from $130 to $180 over robust demand for its AI chips. The firm also upped its price target on Micron from $160 to $165 here. It was really kind of a sweeping analysis of the broader chip segment here, but kind of coming back to what they were using as their methodology, talking about this cloud instance tracker and how they use this as essentially data analytics, tracking the proliferation of semiconductor architectures by region based on instances available to purchase in the public cloud. All that said, they looked across AMD, Nvidia, Google, Amazon, and others as well here, trying to get some clues with correlation to how much these companies are spending and when within their various architectures it will actually pay fruits for their business too.
Yeah, exactly. I think this all just comes down to demand, and they lay it out pretty just point blank in this report, saying that the AI demand continues unabated, that traditional server demand is actually improving. You mentioned some of those larger cap tech names there. The fact that the server supply chain feedback indicates that demand for traditional server demand continues to improve. Most of that demand is from those U.S. cloud providers that Brad was just mentioning, but they also go on to say that they are also seeing sustained demand from China, also moderating, improving demand here within enterprise. So all set up here for a bullish couple of quarters ahead of what potentially could be here for Nvidia. When you take a look at the stock, yes, we have seen maybe a bit of a reset maybe in Wall Street expectations or exactly what current valuations are after that 10-for-1 stock split. But again, the chart just says it all. Year to date, we're still looking at gains of nearly 160%. Yeah. And when you take a look at this momentum, it's pretty much consensus on the street that a lot of this is not going to slow down anytime soon.
Yeah, slight ding after. Right. And so the thesis largely remaining intact. A slight ding because of some of the insider selling that took place, but more largely the trend remains, and especially with what Keybanc is talking about here within the demand profile here, not seeing any signs of a demand pause as demand for H100 remains robust, they say.
When a respected analyst raises their price target on a stock, it often boosts investor confidence in it. This can lead to increased buying activity, potentially driving up the stock price. And a higher price target suggests that Nvidia's future is very bright and that it has a huge growth potential, which definitely attracts new investors who are looking for opportunities to make money. In addition, Such statements can lead to short-term spikes in the stock value. Furthermore, when a renowned analyst makes such a move, other investors may become more optimistic about Nvidia's future earnings reports, expecting the company to achieve higher revenue and profit margins. Bearing in mind that raising the price target this much reflects the company's dominant position in key growth markets such as AI, gaming, data center, and underscores Nvidia's technological leadership and ability to capitalize on emerging trends. And with the nearing release of Blackwell, the continuous rising demand for Nvidia's technology, and as AI continues to play a key role in shaping the future of many businesses, Nvidia seems to be very well positioned to grow massively in the future, and this is why we think Nvidia stock, at its current price, offers a great buying opportunity right now. But, what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.